Hi, it's Peter Temple here, and here is the market report for Monday, January the 25th. Well, this is probably going to be, I think, the most important week of the year because we're looking at a second or fourth wave top, and I'll take you through that. And we also have Yellen on Wednesday with the Fed announcement, and we've got a major cycle turn right after that, 27 to 29. So a lot happening this week, and it really sets up the rest of the year. I want to start with the S&P and the equities. I'll take you through that, and this is going to be a little longer today because I'll spend a little bit of time on currencies and then just touch on gold and oil and what's happening there. So let's start with the S&P 500. And what I'm looking at here, I've gone through this a few times, is this really strange top, the truncation. And this was obviously, if we go back, this is a 30-minute chart, I'll just go back to the hourly. This was an attempt of a fourth wave to get up to the top, and I thought this was the truncation here because we saw 5 waves up. I'm now going with, it tried to get up and do a to get up to the 5th wave here, and it didn't quite make it. So I thought originally this was the beginning of the 2nd wave, and this was some sort of strange ABC first wave, but that doesn't make any sense. So this is your first wave down, and we came to that conclusion eventually. So what we have here, going back to the 30-minuter, is a motive wave, but it's not quite right. This too is a little short because it's all kind of scrunched up here and not right. But we've got, everything's there. It's just a little bit odd, and it would be questionable as to whether it's a motive wave. It is. You can see that, and because of the truncation, this was extremely hard to figure out. And in fact, as an Elliott waver, I discount first waves unless you get a really good second wave, which really should come up 62%, because you don't know if this is a fourth wave or it'll turn around and come back and bite you, or what's going on until it happens. And the next wave always retraces. And as Elliott waivers, we love to get in at the top of the second wave because that means that there's a huge third wave coming. And that happens throughout the market. And I'm going to show you some things in currencies as well, some great setups there that you can take advantage of. So we had this 1, 2, 3, 4, and a big 5th wave, which looks like a typical first wave down. Now the question is going to be what happens now. I'm just going to go into the 15-minute chart and we'll take a better look. Actually, let's go into 10 minutes. We'll have take a better look at what's happening here in the last few days. So we've had one wave up here from the bottom. This is the ending diagonal, by the way, here, and you can see that. 3 waves at the bottom, 2 waves at the top. You can draw your lines, and you always get, or typically you get an overthrow here where it goes up and down to a final bottom, and then you get this dramatic reversal. So we got that, and we got 5 waves up. We had a little 1 here, 2, 3, 4, 5 waves. The 5th wave was a little short. That's fine. Then we got this B wave, and we've had the C wave, which was also in 5 waves. Now I would have expected the C wave to go up to 62%, but it's short. And once you get past 5 waves, or once you get to 5 waves, you retrace. And so we know that we're coming down on Sunday, certainly in the futures. I just don't know how far down. So if it was typical, you'd come down to 62%, which is down in this area here. There's a range of places it could come to. And then if you had a C wave up from here, you consider this whole thing the A wave now. A C wave is either going to come down and go up to here by the time that Yellen speaks, or could it get all the way up to 62%? Well, that is the big question. But we know it's going to come down because after 5 waves it does. So it really just depends on what happens on Tuesday and Wednesday, or if Yellen makes some sort of announcement that takes it up. It has this little final blow off to get up to 62%. 38% here is fine. That just means that this is a 4th wave. And what happens when that kind of action happens, we'll go back to the hourly, is you will get, if it goes 38%, you will get a 5th wave down, which will take you, you can measure from your Fibonacci and extend it to 161%, which means that this wave down will be typically the same length as this wave here. Your first wave. So that would take us down to 1640, and then we would have a second wave retrace taking us back to here. Okay, right back to where we started. The other alternative is that Yellen somehow gets us up to 62%, and we just need a large B wave. So I suggest that's probably a couple of days, and then we've got to get up to 62%. We would get a third wave down, which would be 1.6 times at least, and I think it's probably 2.6 if this is the third wave of the third. That would take us all the way down, and I'll give you some more rather dramatic numbers to that once we figure out what's going on. But if we get past the 38%, then typically we'll go to the 62%. You want to be there for the turnover. I'm going to be here all week, so I'm going to walk you through what happens. So some interesting times coming up. This market is not going up. It is turning over. The question is 38% or 62%. Now, let's look at the euro. This is really interesting because, as I've said for quite some time now, we're in all the same market, and we find that the euro, US dollar euro, or euro actually US dollar, is traveling in reverse in lockstep to the equities market, but it is counter to it. So you have to kind of turn the chart upside down to see it. But every time the euro goes down, the US market goes up, and it's been doing that for quite some time. So let me take you through what I see short term and long term here. Now we know, or I have said, that the S&P is headed down in this very short term. That'll be the next day or two. And I think what is happening here is we have a fourth wave in the euro. You can see this triangle setting up, and we've only had a couple of legs down. We've got a C here and a D and an E shaping up. So I think we're going to see, we need that last leg up. I think we're going to see the euro go up as the equities come down, and then we're going to see this fourth wave play out. And when you have a fourth wave triangle, it always says that there is one final move before the end, and that's going to come down probably to a double bottom. We had a third wave here, and this ended in an ending diagonal. You can see that. Get used to this pattern. I am seeing these everywhere. And on these ones you have 3 points at the bottom always, and usually a little throw over. This one we didn't get much of a throw over. It came down and pretty well met that last point, and then it skyrocketed up. But we had three waves up, one A, B, C, and so that means we're coming back down. So this is our fourth wave triangle. And then we'll get this to play out. And then what I've been saying for about 6 months now, because this is all one market, we're going to see the equities head down in either as I said, a continuing first wave or a third wave, and you're going to see the euro head up again. And the reason for that, if I go to the daily chart, is that when we came down from the very top here, this is our daily chart showing the entire progress of the euro, we retraced, but this is our 38% line. We did not hit 38%. And actually 38%, yeah, that's it. So whenever I see that, I always say, well, the market has this memory, long-term memory, and it remembers that, and it will eventually go back to this. If you remember a few months ago, we were looking at the New York Stock Exchange, and I said, you know, I think it's got to get to 62% before this market turns over. And sure enough, we had to wait till that got to 62% exactly before the market turned over. And that was the top of the second wave. So I would think that this is going back here, and you're going to see that the other currencies, US dollar currencies, have also bottomed, and so they're now heading up. Now let's look at another currency. I like this one. I'm actually short this currency. I just got in yesterday finishing up this wave. This is the US dollar Canadian dollar, and what we've seen is a very long wave down. This is just the bottom portion of it. I'm on an hourly chart here, and we saw actually an announcement. We'd already bottomed. I was expecting this any day now, but on this one we had a second wave, fourth wave, fifth wave, and this is the final wave, and then we've got this reversal, and this is a very emotive sequence. And what you find out, one of these unwritten rules is that we always, typically when you get a reversal and you get a motive wave, we're going to return to the previous fourth. And so if you were to look at this, this is a big flat fourth wave here. If you get used to those as an Elliott wave pattern person, that's what you look for. And so this wave is setting up, and I'll just show you quickly what the measurements are telling me. So we had one wave up, we had a second wave down, then we had a first wave up, and this is another typical thing, is this first wave as part of the third wave is the same length as the first wave. so your little I wave here is exactly that same length, and that's typical as well. And then we had a third wave of the third, then a fourth wave, then we're working on the fifth wave, and this fifth wave is typically 1.6 times the length of the first wave. So here we go at the bottom of the fourth here, and I measure up, and there is the top of the fifth. Now it could also extend to 2.618 times the length of the first wave, which would take us, interestingly enough, right to this previous fourth. And the market is really uncanny the way it does that. So it's going to get to here eventually. Whether it actually goes to the third wave and completes, and then does a fourth wave down to the previous fourth, which I think is the likeliest, and then it does a fifth wave up, or it could go all the way up here and then do a fourth wave down and a fifth wave up to the same spot. One of those two things will happen, and then we will get a very large second wave down. So that's, I think, the scenario, and I think this is going to happen relatively quickly because we've come down here. This is the only chart really that is flipped. All the other U.S. currencies are euro, U.S. dollar, pound, U.S. dollar. The Canadian one is U.S. dollar CAD. So you have to kind of think of this in reverse if you're not used to the Canadian dollar. So we've got some more downside here to go, but it is going to be a little choppy because we've got some up and down, and then you're going to have a great retrace all the way down to 62% once this fifth wave is there. So you might just watch that longer term if you don't want to take this short-term trade. Anyway, that's the U.S. dollar, Canadian dollar. Another currency now, the Australian dollar, US dollar. This one also has come down to, we had a little ending diagonal here. This one's kind of a little odd because we didn't have 3 points. So, well, we need to, 2 points up here or across the top, but we didn't really have 3 points that hit the bottom. So it's kind of a quasi ending diagonal, but very close. But it did have a double bottom here, and that was telling because right after that, and I think I noted that some time ago, we have 5 waves up. So 1, 2, 3, 4, and a big long fifth wave, and it went right to the previous fourth, and that's what I talked about in the CAD US dollar one, or US dollar CAD chart, that they typically do that. So what we have now is a second wave retrace, and I was looking at it yesterday, and I'm actually long this one short time because this has got to go up and do a little second wave here and then come down all the way to this point, and then it's going to head up. So there's some opportunities there, certainly, both short term and longer term. So let's look at gold. I'm just going to use this ETF GLD, but the gold charts are pretty well exactly the same. So what we have here, this is the 3-day chart. I have to back out to that point to be able to see the whole thing. But we came down in a first wave, second wave, and a big long third wave, and then we've got this great big ending diagonal. We had a fourth wave here, this sort of ABC thing, and this ending diagonal, another ending diagonal. And so what we're expecting now, this whole thing being an A wave, it's terminated. We're expecting a B wave up to 62%, so you can mark that off. I don't have a gold number for you right now, but I will post that next to the video and tell you what I think the number is going to be. And I'm also going to put this in the forum somewhere eventually so that people understand this. This should go up in 3 waves, and then we're going to have another, probably a 5 waver that'll come way down 1.6 times the length of this wave, so it's going to go down quite far to the previous fourth down there somewhere, and that will be much longer term. It's going to take a while for this to bounce, but gold is heading up, and we can very quickly go into the hourly chart to sort of show you where we are. We had another ending diagonal here and then a double bottom, and so we are slowly coming up in our 1, 2, 3, 4, 5 waves, and we should get up to this point here, previous fourth, before we see a topping and another wave down and then a much larger wave up. So we have a long way up to go. I'm going to be monitoring this on an ongoing basis, so there's some opportunities in gold. Let's look at oil. Of course, I'm in the Canadian oil capital, Calgary, and we've been hit pretty hard by oil coming down. All expected. We knew this was coming. Well, the people on the street and the oil companies didn't know it was coming. But we as traders knew it was coming. So here we are in oil, and we're now in another ending diagonal. Again, get used to these patterns because they are all over the place. So this is when you actually mark this one up as Elliott wave, you get the 1, 2. This is a great big long 3, and you always get this 3 that's an ABC. Now, ending diagonals are all in 3 waves. So you've got this wave here, and we need one more wave up, which will be the 4th wave, and then we're going to have a 5th wave down. So we've actually finished the 3rd wave of the ending diagonal. We had a big bounce, and this looks like we've done 5 up here. So we will get we'll come down a little bit here, probably 62%, and then we will head up in a C wave. I'm not sure if we'll make it all the way up to this point, or it may take a while to get there. Not sure how that's going to work, but we should get somewhere in around $35, I would think, over time, 37, and then coming back down probably to, they're saying $10, and that's because I think it was 1999 we had a $10 bottom at that point, and we're probably going down. It was a previous 4th wave. We're probably going down to that point. So there's a short-term opportunity here, but this is not the end of this wave. We all believe we have a 5th wave down still to go in oil. So that's your market report. A little longer today, but I wanted to go over a lot of items to give you a heads up as to what's happening short term and a little longer term as well. Good trading.